Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, the legislative framework that will allow the Nigerian Stock Exchange go public passes second reading at the House of Representatives. Kenya to convert its $243 million in loans to Kenya Airways into equity. Plus, Uganda hopes to close a loan deal of up to €325 million this month with a UK government credit agency and Standard Chartered Bank. Let's get started. And of course, we're starting with that story, the legislative framework that will allow the Nigerian Stock Exchange transform from an organization limited by guarantee into a new one limited by shares has passed the second reading at the House of Representatives. Leading the debate at the lower house is the sponsor, Honorable Tajuddin Yusuf, who explains that the transformation of the stock exchange into a public liability company, or PLC, will improve liquidity, promote competitiveness, and engender better good corporate governance. The Speaker of the House, Speaker Yakubu Dogara, has therefore referred the Stock Exchange Bill to the House Committee on Capital Markets and other institutions for further legislative action. The Nigerian Stock Exchange started its demutualization journey in 2001, but has gained more traction in the past few years. Meanwhile, the Nigerian equities market continues to rally, with the index up 0.80% at intraday. And of course, the market in South Africa, the JSE, was also in the green at intraday, as the market awaits a credit rating decision from Moody's being expected later in the day. The JSE was up 0.17%. South Africa sank into recession in the first quarter, and investors worry this will prompt further rating downgrades. Moody's, whose Baa2 rating is 2 notches above junk, placed South Africa on review for a downgrade in April, after a controversial cabinet reshuffle that saw Finance Minister Pravin Gordhan sacked. Egypt closed in the green on Thursday, while Kenya was down 0.01, also on Thursday. In the Middle East, Qatar's stock market rebounded on Thursday from a steep slide caused by its diplomatic rift with neighboring states, while a plunge in oil prices weighed on Saudi Arabia's bourses. Looking at those figures there, the Qatari stock index, which had lost 9.7% over 3 days since Saudi Arabia and the United Arab Emirates cut diplomatic and trade relations, bounced 3.04%. The mood in Doha remained nervous. Standard & Poor's downgraded Qatar's credit rating on Wednesday night, and the economic damage to Qatar from the rift could become serious if foreign banks pull out funds. That's actually some analysts' views there. Saudi Arabia's index fell back 1.17% after the Brent oil price tumbled 4% overnight. In Dubai, the index fell 0.17% as Ema Properties, which had surged 8.6% on Wednesday after saying it planned an initial public offering of up to 30% of its United Arab Emirates real estate development business, slipped back 0.3%. In Abu Dhabi, the index rose 0.5% as Dana Gas continued to outperform, adding 3.9%. It leaped 10.9% on Wednesday after saying it had received $40 million from the Egyptian government towards its outstanding receivables. And in Europe, bourses there were higher on Friday morning as investors reacted to what is tagged as a hung parliament in the UK's general election. Let's get a sense of all of that from my colleague in Frankfurt, Conrad Busen. Always seem not to have Conrad yet, but we'll get through to him as soon as possible. We'll move over now to the U.S., where the index futures pointed to higher open on Friday following results of the UK election, with Theresa May's Conservative Party losing its outright majority in Parliament. Many features for the Dow, Nasdaq and S&P 500 all pointed higher at 6.36 at 6:36 a.m. Eastern Time after news emerged that the UK snap election had ended in a hung Parliament, with UK Prime Minister Theresa May having called for an election earlier this year. Her party, the Conservatives, had expected to strengthen their hand in the June 8 election, but had ended up losing a number of seats in Parliament, meaning the election has shown no clear majority. Conrad is back now to us. Of course, it's all about the UK elections, and I guess there are other developments. Conrad, thank you very much. Good to have you on the program today. Now, many European bosses are rallying today. That's on the outcome of the UK parliamentary election. What does this mean?
Well, it is basically a reaction to this slump in the British pound. A cheaper pound makes it more attractive for businesses in the UK who have a lot of international business. They get better earnings when the pound is cheap, and this was what caused this increase of the British, the FTSE 100 index in London today when trading started. The German DAX got a bit of a boost as well. You can see it here. There was a bit of an upswing this morning, but look at this. This doesn't really look like a decisive, optimistic upwards action. It's more of a sideways movement. And this jittery line, I think, suggests also that many people on the markets are bracing for more volatility, for more insecurity after this election in London.